I think it's going to be worse. I think we're going to end up down at these levels again. Who knows? But, in 2000, this crash was a stock market crash. This was a real estate and stock market crash. This is going to be bonds, stocks, and bonds, real estate, and stocks. It's everything all together. Hi, this is Mike Maloney, and I was just reading this Washington Post article, Soaring U.S. Dollar Spreads Pain Worldwide. And it's a fairly international look at what these stupid floating currency regimes cause. This is an idiotic, it's not a monetary system, it's a currency system. But the global currency system, this is something that causes pain and poverty, and we don't know it because we don't have any basis of comparison. If we had a stable international currency or money like we used to use, gold, I believe that our level of prosperity and existence would be far higher than it is today, and you would have seen a whole lot less war, and it would be a very, very different world. The financial sector would be much smaller than it is right now. Manufacturing and things like that, the real economy, would be much larger by comparison. People, I think, would be living longer lives. We don't have a basis of comparison. All we've got is data on how how economic freedom creates long lifespans and happier populations and less pollution. Everything's cleaner, less child labor problems, and so I know that when they manipulate the currency, it causes problems with businesses and individuals, and nobody knows what is going on or how to keep up. And so this article sort of hit home on a couple of things. It's a fairly international article. They cover Nairobi and Manchester, England, some interviews, and they've got Russia's invasion of the Ukraine. But it starts out with the cost of living in Cairo. Now, when we filmed Hidden Secrets of Money, episode 1 starts in front of the pyramids. And this was on a big tour that we did that went from the Bank of England, and we went up to St. Petersburg, Russia, and then to Paris and Rome and Athens and Egypt. And Egypt was supposed to be the lowest cost stop, the least expensive stop on this entire tour. It was supposed to be a fraction of what the others cost. It turned out to be multiples. And the reason why, I didn't know it at the time. I should have recognized this, but because, I've got this monetary history background and economics, and we landed in a place that was about to go through a revolution. Just a few months after we were there was the Arab Spring. These people were in massive inflation and they were desperate. And so what happened, from my perspective at first, I didn't realize what was going on. I really didn't like being there because there was always somebody trying to scam us and take us every second that we were there. And what it was their desperation and trying to survive. That's what was going on. But it turned out to be a very, very expensive portion of the trip. And I'm going to cover a little bit more of that later. But here, this guy, Jamal, 28, working 2 jobs, sharing an apartment with other young people, and eliminating meat from his diet. Remember this because this is important. The prices of everything have been doubled, he said. There is no alternative. And so people are getting to this point where they're barely getting by again. Now, what causes this is this idiotic, hundreds of years, if mankind is still around 100 years from now, they're going to look back on this floating currency system that we've got instead of having a fixed international standard of value that all people can rely on and count on, where you can know if you're importing or you can know what the prices of things are going to be in the future. You can know, you can project. I'm sure that we would be living longer, happier lives and have a much smaller, the financial sector would be very small in comparison to manufacturing and everything if we had some sort of real monetary system that we were using, where you had, like gold, where it was fixed and there were no floating exchange rates. There was some sort of standard of value. But here is the U.S. dollar, and this is the U.S. dollar index. And we've got a peak here of 165, and then a valley of 72. And the percent change between these is just, it's mind-boggling. Stuff became, the U.S. dollar, when I went to the Netherlands, I was in Amsterdam back in about 1984, so it was right around this period. I bought a pigskin suede trench coat, full-length trench coat, for about $80. I couldn't believe how inexpensive everything was on that trip. But then you get to some period like this, and everything is really expensive when you're traveling, because this was the period when we were filming Hidden Secrets of Money. So I got, the firsthand experience of these idiotic floating exchange rates. And now we've seen this sudden climb. I mean, this is a very fast climb in the dollar. This is Brent Johnson's dollar milkshake theory coming true. And, when I heard about his theory, I think the dollar was at 100 or 98 or something like that, whenever he first came out with it. And I said, he's got a point. This is true. And he also said that there will come a time where the dollar and gold rise together. And I said, that is also true. Now, we're in a zone here where there really isn't any resistance until we get up to about 120. Now, technical analysis doesn't always work, but I have a feeling that we are headed there. And one of the things that can cause that is if they raise interest rates in November, coming up at the next meeting, if interest rates in the U.S. go up, that attracts bond investors. It attracts currency from all over the world seeking a safe haven, what they consider a safe haven. They're deluded, basically, fooled into thinking that U.S. Treasuries are a safe haven asset. And as the currency floods in, then this will rise. And that causes anything that is priced in U.S. dollars that they are buying in another country where their currency is falling. Those things are going up tremendously. So we have inflation in the U.S., but at the same time, this rising dollar, which isn't a rising dollar, it's a falling dollar, or there would not be inflation. People need to understand this. The dollar isn't really going up. It's not falling as fast as the other currencies. That is what's going on. But now we're in this weird, I've talked about indeflation for many years, and we're back into this weird situation. We have, retail prices, things in the consumer prices, grocery store, gasoline, all of that going up, while we're now seeing asset prices starting to deflate. So we've got deflation and inflation simultaneously. And but this is going to continue until the economy breaks and the Fed flips and pivots, or that's what a lot of people call it. Now, we've got all of these bubbles that they're enormous bubbles, and they're just starting to deflate. They have not burst yet. This is just the beginning, folks. So this is real estate being down over just the last 5 months here. It's down 16% in Oakland and about 15%, and mostly it's all of the bubbles that were developed that have started to deflate, but they have not yet burst, like I said, and they will. This is only the beginning of the pain. But Michael A. here says, congratulations to those who bought a house 25% above the asking price earlier this year, because home prices only go up. Man, where did I hear that before? I used to make these appearances with Robert Kiyosaki at these Learning Annex Wealth Expos, 30,000 people in Los Angeles, 15,000 people in New York, 10,000 people in Atlanta, Chicago, and Boston each. And all I heard was real estate, it's safe. You can always invest in real estate because it always goes up. It never goes down. Nothing to worry about. Nothing to see here, folks. My friend Ronnie Stofferle, he says that this is the fourth worst year in the last 322 years of bonds. So if you are a bond investor, this is what your performance looks like. So World Government Bond Index annual return. So it's pretty tragic, but there's bonds and there's stocks. Well, we were in the almost everything bubble. Stocks and bonds and real estate are all they're just starting their deflation. The bubble hasn't completely burst yet. Dan Tapiero, he's recommending a little bit of allocation into cryptos. Now, I've got a much larger allocation than just 5%. Cryptos are my second largest allocation after precious metals. Precious metals are by far my largest allocation. They make me feel the safest. But if you take a look at this is a chart of 60% stocks and 40% bonds, which is like your standard, conservative, supposedly, over the long term, it's always going to give you a return. But this is the worst return in 100 years because bonds and the stock market are both going south together. And so what do you do when everything is going bad? I mean, the stock market has barely begun the burst of the bubble. I mean, you look at the size of the crash here in 2008. This is a logarithmic chart, and we are to about here. There's like 2/3 of it left to go or more, and I believe that is, I think it's going to be worse. I think we're going to end up down at these levels again. Who knows? But, in 2000, this crash was a stock market crash. This was a real estate and stock market crash. This is going to be bonds, stocks, and bonds, real estate, and stocks. It's everything all together. We haven't had a bond market crash like this. Let's go back to Dan Tapiero's chart. 9 or 70 it looks like, and back in the 20s. So this is a rare event, but it's going, when they raise rates in November, that is where the economy will break. So right now, we are being given a gift. This is a very rare gift. Right now, precious metals prices should be soaring, but they're not yet. And so it's a gift to be able to get ready for what's coming. So this is gold's. These are the Japanese yen, the British pound, and the U.S. dollar against gold. Gold being the measuring stick. We're going to see how well those currencies perform. Well, when we got to 1934 in the U.S., the U.S. dollar was devalued, and instead of being worth 1/20th of an ounce of gold, it was devalued to 1/35th of an ounce of gold. And then there was some chaos, and then we started the Bretton Woods system and the Japanese yen. Look at that. And then we went on to this is when the Bretton Woods system went live and the pricing was established. And then we go into the global dollar standard, or the floating exchange rates. And you can see these currencies falling to these minuscule percentages of gold. And so where do you turn when everything else is going bad? The only places are gold and potentially cryptocurrencies, but cryptocurrencies are new and they're highly volatile, so we don't actually know how they're going to perform in all of this. I think they're going to perform well. That's the reason it's a large percentage of my portfolio. So this little pullback that we've had in gold, I give you this long-term chart to gain perspective here, because people think if it falls from 1800 down to 1664 that the world has ended. Well, it hasn't. This is just a gift of being able, there's lots and lots of support in this range. So yes, it could go down to 1400 or something like that. Silver probably won't fall as much. Look at how much trading happened in this range here, and we're sitting right on the top of all of that support right now. So silver is, when the gold-silver ratio is this high, I buy only silver. When it's down here, I buy mostly silver, and like 25, I take my cash 75% towards silver, 25%, and then 50-50, and then down here, 25-75, and down here I buy only gold. But if you look at where this is now and the support that we have on silver and a little less support on gold, it wouldn't surprise me to see this shift. So to me, silver is the bargain right now. But anybody that waits until something hits the fan, at that point, gold and silver become very, very difficult to get. We saw it back in 2008. It was very difficult to get. The spot price fell, but the price for physical, if you were trying to get coins and bars, went up. It didn't go down. And everybody was mad, thinking that, but you know, the dealers have to source this from somewhere, and they're sourcing it from somebody that's willing to let go of it. Right now, the premiums on Silver Eagles is still sky high for some reason, and it's because it's a supply-demand issue. It isn't that there's, you know, somebody able to hoard and capture all of this giant profit. That isn't it. The profits for precious metals dealers are razor thin, and they're always razor thin. Their costs go up during these periods of time. That's one of the reasons I buy InstaVault right now. InstaVault is where you're buying ownership of ounces within a large bar, like a 1,000-ounce bar of silver or a kilo bar or a 100-ounce bar of gold, because those that form of gold and silver is the least expensive physical gold and silver that you can get. That's it. And so we source it at a very good price. We pass that price on to you, but it's in storage. If you want delivery, you have to click some buttons. And if you're taking delivery of a 1,000-ounce bar of silver or a kilo bar of gold, you get it at the same price. If you want to take delivery of something different, you have to pay whatever the difference is, the conversion fee into that more expensive item that you want. But, you know, there's been a misunderstanding. People are saying that I always said, if you don't hold it, you don't own it. I never said that. I said, if you can't hold it, you don't own it. There's a big difference. I mean, I'm getting calls from customer service saying, customers are saying that you said this, and if they don't hold it, which means it's in storage somewhere, you know, like at Brinks, like InstaVault, that you don't own it. That isn't what I said. If you can't hold it. Well, I've got a bunch of InstaVault. I can click one button and have that on its way to me, and I can hold it in just a matter of, well, it depends on how busy Brinks is. During a rush, there's going to be some delays on everything. A dealer cannot stay in business and engineer his business to be able to handle the rush that happens once every decade or so. So there's a sudden spike that's about 100-fold in business. And when you get that spike, like in 2008, like the COVID crash, then back order times become long and customer service isn't that good, because personally, I don't know how any business could survive having 100 times more employees than they need for a day-to-day operation of that business. We have to compete against everybody else on these razor-thin margins. And the problem is we need 100 times more people when everything explodes. So this is the time for me. This is what I've been doing. When premiums on things like Silver Eagles and 100-ounce bars come down, I buy those then. When premiums are high on those, I don't touch those. I buy InstaVault. And you can convert over to those later if the premiums ever come down again, which I don't know if they will. But it's if you can't hold it, you don't own it. With InstaVault, you can hold it. It's a click of a button and it gets shipped to you. So getting back to Egyptian Spring and that first story, that Washington Post story, in the first episode of Hidden Secrets of Money, we interviewed Max Kaiser. And he was, we were there about 3 months before the revolution happened. There were 2 revolutions. There was an overthrow of the government. This was huge. So if you were an Egyptian, I mean, I feel for you because you went through some severe pain during this. But basically, Max was saying that this affects them basically as a percentage of their income that goes to food. And for example, in Egypt, and this is a picture, these are big armored cars with water cannons that are trying to control the rioting and protests that are going on. Once that ratio got to 40% of their income going to food, and the price of food rising due to inflation, when it got to 40%, that's historically a point where people actually stage a revolution, and that's exactly what we saw. The French Revolution, similarly, was all around the price of food going to a certain critical point where people simply, the risk-reward for revolution was favorable toward revolution. So people are willing to potentially lose their lives over this. That's how much society was unraveling. You may want to, this is about the 20-minute mark where this starts on Hidden Secrets of Money, Episode 1, Money versus Currency. And this is an important distinction. Please stop calling currency money. It does not deserve your respect. The dollar is a currency, and it deserves your disrespect, not your respect. I want to thank you for watching. We'll see you next time.